And so if you zoom out and you say, okay, Bitcoin is super good technology for savings, it's incredibly versatile, and we're measuring the returns in something that has no ceiling, US dollars, you can get your arms around a very constructive outlook for the future price performance.
All right, welcome back, everybody. We are here with Andrew Hohns, founder and CEO of Newmarket and Battery Finance, an absolutely brilliant financial mind in the Bitcoin space. We are super happy to have you both with us today and more generally in this space. Andrew, let me pass the mic to you for a second if you just want to add a little bit more, just a bit of a further introduction, if you don't mind.
I'm grateful to be here, Frank, and grateful to be contributing to the Bitcoin community. I think that the time is really right for extending Bitcoin's capability as a tool for long-term financing. And I know that we're going to be talking about that a bit today. So
We are
happy
going
to
to.
be here.
Yeah, absolutely. For those who haven't checked it out, I actually wrote a great piece on not necessarily my writing that made it great, but what Andrew has created with a Newmarket in terms of using Bitcoin as collateral for loans, a really, really innovative way of doing so. So we'll put that in the show notes. Make sure to check that out. But we want to dive into today is what you proposed a few weeks ago at the Bitcoin Policy Institute's Bitcoin for America conference. And it was truly a show-stopping, I think, 9-minute talk. People were talking about it a lot afterwards. And you were up against some stiff competition that day, including Vivek Ramaswamy, Michael Saylor. People were very much taken back. I'm actually blown away. I haven't seen you on more podcasts or doing more video interviews since then. So if you don't mind, could you give a quick recap of what you proposed that day? So BitBonds and sort of so what you touched on that day, what a BitBond might look like and why this might be appealing, not only to the U.S. government, but to retail investors in America as well.
Absolutely. No, I've been thrilled with the reception that the thought experiment has garnered since it was released, and nothing would make me happier than if we put this to work as a pilot program. So thank you for this opportunity.
Of course.
For folks that want to dig in deeper, the Bitcoin Policy Institute released a detailed white paper on the BitBonds proposal that I co-authored with Matthew Pine. So that's available for free on the Bitcoin Policy Institute website as a PDF, and certainly goes into all of the particulars of the proposal. But at a high level, what we're seeking to solve for is really three different elements. Number one, how can we reduce the interest rate of the long end of the curve for the United States Treasury? Because, with interest rates having increased over the course of the last several years, and also with the amount of indebtedness that has to be refinanced being quite high, that presents a very significant challenge to the US current budget in terms of the amount of interest expense.
Okay.
Number two, we're seeking to think creatively about how to pay off the national debt. And I think paying off the national debt per se is much less of a likely strategy than accumulating a sufficient amount of assets or a growing asset pool that renders the liability of the national debt as a much smaller proportion of the overall asset side of the balance sheet
Right.
of either the Federal Reserve or the federal government. And then the third element is, in the context of Bitcoin being a strategic initiative for the United States, how can we share in some of these gains with American families and American taxpayers? And how can we deliver an instrument that provides folks with downside protection in order to facilitate more participation, but at the same time shares some of the upside associated with the successful carrying out of the first two objectives? And in that regard, we propose that the BitBonds would be tax exempt for US taxpayers, American families, both from an income and a gains point of view.
Mm.
So, with those three objectives in mind, what I proposed was a new type of Treasury issuance to be called a BitBond. And, I consider that to be a rather flexible term. There could be BitBonds that are zero coupon, like some folks like Brian Estes have proposed. There could be BitBonds of a shorter duration, a medium duration, a longer duration, different proportions of sharing and different interest rates. But the thought experiment that I put forward was a $2 trillion issuance, of which 90% would go to the usual government spending needs and 10% to Bitcoin.
Hmm.
So $200 billion to Bitcoin. And investors would buy this bond. They would receive a 1% per year interest rate, so about 350 basis points less than the 10-year interest rate for a normal Treasury bond. No matter what happens to Bitcoin, they would be entitled to repayment based on the full faith and credit of the US government. So 100% repayment at par. But at the maturity of the bond, investors would get all of the Bitcoin return up to a 4.5% compound annual growth rate.
Okay.
And then anything above that, they would split 50-50 with the US government.
Could I ask you a question there, if you don't mind, Andrew?
Yeah, by all
When
means.
when you say split 50-50, is now literally the government taking half of the Bitcoin and then the person taking half of the Bitcoin? Is that what you're talking about? We're talking about the dollar amount of the Bitcoin at that point.
I think probably the dollar amount would be
Okay.
an easier way to do it because
Okay.
that way the government would be able to build its Bitcoin strategic reserve more quickly and not introduce a big liquidity pressure on the Bitcoin market.
Yep.
But I think that's a little bit of a detail in the implementation,
Okay.
and I'm sure that officials at Treasury, if they adopt this proposal or do a pilot program, would be certainly a detail that they would want to work out.
Okay. Yeah, because I would imagine some people might prefer that, might prefer the dollar amount if they're not comfortable custodying their Bitcoin or something like that. Whereas some others might not. I wonder if there would even be some sort of open mindedness to being flexible about that. Maybe having it be an option.
Well, I think that the dollar amount becomes a very feasible structure, especially if we can follow through with the proposal that the income and any capital gain be tax exempt.
Got it. Right. Yep.
Because then a person could receive that final payment in year 10, and it could be up to them
Right.
if they want to take some or all of it and buy new Bitcoin. Maybe they're more comfortable with the Bitcoin at that time,
Yep.
or maybe they want to roll it into a future BitBond issuance and they're comfortable with that, or maybe they want to do something else with it completely.
Yep. Yep. When you think about the type of retail investor that would buy something like this, what are the benefits? What's going through their minds? As you just mentioned, maybe the person's not super comfortable buying Bitcoin, holding it on their own. So something like this feels better for them. One, in terms of, okay, I don't have to, I could sort of get some exposure to Bitcoin, but I don't have to custody it. And then the other side of it, like you said, some of the tax benefits that could come with this, that might be another really nice incentive with this. But when you sort of conceptualize this, who were you picturing would be who would prefer to buy something like this versus just buying Bitcoin directly?
Well, I think that there are all kinds of natural audiences. There are retail investors, there are institutional investors who are using US Treasuries as eligible collateral under a range of financing arrangements like repo and other kinds of swap lines and other things for which you need to post eligible liquid collateral. And if you had a choice between posting a US Treasury where the return was 4.5% no matter what, or and the market value of it could bounce around quite a lot depending on where interest rates go,
Right.
or a US Treasury where no matter what happens to Bitcoin, you're going to get par back.
Okay.
And if interest rates go down, actually the Bitcoin component might go up significantly, probably would.
Right.
And so the market value of that could be a very efficient way for institutional investors to post collateral. I think it would become a really popular product
Okay.
for anyone who needs to post treasuries. For businesses, for families that are seeking to save for the medium run, uh, I think it's a win-win-win because the U.S. government would have a lower current interest rate. The families would have the security that no matter what, their savings would be protected as to principal, and they would get, at least some current interest rate, like a 1% interest rate.
Yep.
And then instead of capping that overall return in an environment where inflation could, reemerge and potentially reemerge significantly, they would have some meaningful upside participation, which can really offset inflation. So, for new investors to Bitcoin, I was having a conversation actually quite recently with a relative of mine who shared that she was caught off guard. Let's say she's not as active in the markets as I'm sure some of the listeners are, but
Yep.
she was caught off guard by the rapid sell-off from the tariff announcements,
Mm.
and she repositioned some of her equity portfolio into treasuries. But she said to me, if I had had the opportunity to reposition it into a BitBond, I would have definitely done that.
Mm.
And I got to be honest with you, Frank. I never expected her to say that at that
Yeah.
moment. I didn't even
Mm.
know that she was following the BitBonds proposal. She's
Okay.
not, and it actually made me think. Maybe there's a bigger market for this than than you would think at first blush.
Yep, yep, absolutely. One of the mechanics that I'd like to learn a little bit more about, you've talked about how the issuance of BitBonds could bring down, I believe it's just regular Treasury yields. How does that work in your mind? So, issuing a separate type of bond, how would that bring down normal Treasury yields? Is it just, yeah? I'll leave it there.
Well, there would be a certain extent to which how much could get done in this pilot program would just reduce the weighted average interest rate of traditional treasuries that don't have the Bitcoin element, and however much can be done in the BitBonds program with a directly lower interest rate.
Okay.
The extent to which the BitBonds are able to drive some interest, and I believe that they would be very popular, because if you look at the extent of oversubscription that Michael has achieved with all of the MicroStrategy convertible preferreds, and
Yep.
also with the really interesting innovations with STRK and STRF. I think that this would be a very popular instrument. And now, if you start having some of the bonds with a 1% coupon and this upside, um, I think it just brings more liquidity into the overall market
Got it.
in a way that would be very beneficial.
Okay. In terms of, you talked a lot about the different ranges of the compound annual growth rates that we could see with Bitcoin over time, and you gave different examples of what returns would look like in this range if it hits a sort of a smaller growth rate. And you went through all of these. You seem to be very convicted that Bitcoin is going to succeed long term. I remember this from the first time we talked. I was just wondering sort of where that came from, because I think it seems very obvious to people that are in this space, and to look at Bitcoin's sort of historical price prediction, just but at the same time, working in the world of traditional finance, you're speaking to a different audience a lot of the time. But a lot of people, I think, are going to look to you and say, where does this conviction come from? Why do you think Bitcoin is going to keep doing what it's doing? What makes you think that that will be the case?
Well, I think that it's always useful to look at history and to ground your expectation in history, uh, and just to assess. Okay, this would be less than what's been historically experienced. This would be on target. This would be above target. Then you just have some guideposts. But from a fundamental point of view, I have three legs of my Bitcoin valuation stool. The first leg is that it's the best savings technology around the world for everyone around the world. That's for individuals, for families, for businesses, for governments, for institutions of all types. It enables them to save their purchasing power across time and space in an asset that is weightless, fungible, divisible, universal, accessible, transparent, auditable, uh, really just so many different reasons. And it pertains to different people around the world in different ways. If you're in what Alex Gladstein has helpfully referred to as the golden billion, people that are born into the euro, the dollar, the Swiss franc, the
The yen.
Canadian dollar, the yen,
Right.
then you have a wide range of financial services that are available: banking products, credit products, leasing products, certificates of deposit, medium to long term mortgages, business loans, stocks, bonds. But if you're in that other 7 billion, folks, then your access to what some people in that billion might take for granted, such
Yep.
as the ability to own even Microsoft or Apple stock,
Yep.
is greatly curtailed, let alone having a broad suite of banking products. And so, even though people that are living within, let's say, some of the better performing fiat currencies that I just mentioned
Yep.
are also finding Bitcoin, many people that are living with the Argentinian peso or the Turkish lira or the Nigerian naira or any number of the 130 or 40 or so different currencies around the world
Yep.
are finding Bitcoin as a strong alternative to saving in either their local currency or saving in other tools like sheet metal or livestock, which are clearly inferior to saving in Bitcoin. And what you
Yep.
need to save in Bitcoin is a phone with an internet connection.
Yep. Yep.
And that's become a lot more accessible for many, many people around the world. And for those that are in places that even do have more liquid currencies, Bitcoin is still winning in terms of being by far the hardest asset in the world.
Yep.
Uh, not a growing supply. In fact, a finite supply that's mostly already all issued, 95%.
Yep.
And you can save a little or a lot. You can save periodically. It's highly liquid. It's got a lot of factors going for it. So that's leg number one of the stool. Leg number two of the stool is that in addition to being the best savings technology for people all over the world, Bitcoin is also extremely versatile. It's versatile in ways that are already established and
Hmm.
versatile in ways that are imagined in the future. Already established ways are all of the energy use cases being used to balance the grid in ERCOT or recapture orphan oil well and natural gas well emissions or landfill emissions in the case of companies like Vespine or Nodal,
Yep.
or being used by tremendously innovative companies like Gridless to build out microgrids in Africa through run-of-river hydro. But not only energy use cases, and waste heat byproduct, which Mara is really leaning into and exploring,
Yep.
but also, of course, payments and remittances, and many emergent use cases as well, like e-gaming, SATS streaming,
Yep.
cybersecurity, and the idea of cyber domes that are protected by Bitcoin, I think, is going to be one of the likely going to be one of the most substantial use cases for Bitcoin over the course of the next 5 or 10 years, and will really, because if you were a company, why would you rather pay a third party to do penetration tests and to give you all of these audits and results to protect your cybersecurity when instead you could own an asset that would protect your
Right.
cybersecurity by having a cyber dome? That seems like a much better, more rational approach.
Yep.
So the second leg of the stool is all of the versatile use cases which add to the demand for Bitcoin, underpin its value as a savings technology, but are not directly driven by the savings technology thesis. And then the third leg of the stool, which I think is uh, one that's just very, very important to bear in mind, is that we're measuring the results in something that has no upward bound, which is to say, we're measuring the CAGR in US dollars, yen, euro, sterling, or whatever else the local fiat currency is that we're talking about.
Yep.
And when you think about where we are, in my opinion, with the long-term indebtedness, not just of the funded debt, 37 trillion, but also Medicare, Social Security, the state pensions, which are largely underfunded,
Yep.
many municipal pensions in a similar situation. And not only those in the United States, but a similar discussion even in Canada and Europe and
Yep.
Japan, China even. I believe that it's very likely that we're going to see a significant increase in the quantity of money. And already people are reporting it in the recent days, M2. But
Correct.
recent days is not what I'm talking about. What I'm talking about is the big picture.
Yeah.
And so if you zoom out and you say, okay, Bitcoin is super good technology for savings, it's incredibly versatile. And for purposes of our discussion, we're measuring the returns in something that has no ceiling, US dollars,
Yep.
in terms of quantity, then I think that you can get your arms around a very very constructive outlook for the future price performance. And so with all of that, if you then say, okay, I'm going to size a program like this to perform really well at the 10th percentile of historical returns,
Yeah.
or at the 25th percentile of historical returns, which is to say 75% of historical periods have been better, or 90% of historical periods have been better, then I think that that implies a robust design from a financial engineering perspective.
You are a legend, sir. I mean, if brilliant financial mind still familiar with the work of someone like Alex Gladstein, I feel like it's sort of a very rare thing to meet someone like yourself who really has that sort of dynamic and as broad of a perspective as you do. Very, very exciting. Please, yeah.
All you have to do is read. There's
That's
so many good authors in the Bitcoin space. I mean, Alex is great. Lynn Alden, I think,
yep.
is absolutely tremendous. I'm so
She's
thrilled
amazing.
how many
Yeah.
languages Broken Money's been translated
Yep.
into. Alan Farrington and Sasha Myers are, Bitcoin is Venice is one of my favorites, but there's
It's
so many
absolutely. Yeah.
good resources.
I love that it's one of those, you mentioned my two favorite books. So appreciate that a lot on a personal level. I guess my last big question here is, when do you get to meet with Secretary Bessent and convince him of this idea here?
Uh, I would be um, I would be so thrilled to have the U.S. government just give this a try. I listened to Secretary Bessent's interview with Tucker Carlson. I also listened to his recent interview on the All In podcast,
Yep.
and I think that he's absolutely the right person at the right time for this
Totally.
job.
Hmm.
He's got such such a good understanding, and I also think his heart's in the right place,
Hmm.
and I think his motivations are genuine. So I would be, yeah, very interested in the policy paper with the Bitcoin Policy Institute. The way that we framed it, and this was really one of Matthew's great contributions to that paper,
Mm.
was, you know, um, like a proposed implementation.
Okay.
So it says, look, $2 trillion is a big number. It's ambitious. It's bold. Uh, but we can start with $5 or $10 billion of issuance, or $25 billion of issuance, and work it out. Let's
Okay.
work out the implementation. Let's figure out what the pricing would be. Let's build the market. Let's talk to potential buyers of the BitBond, both on the institutional side as well as provide. Actually, he contributed the idea that we would have uh, potentially an offering through Treasury Direct for some of the retail buyers, or even have individuals, standing outside of the local supermarket with informational materials, say, "Hey,
Okay.
this is a way that you can subscribe, and here's the proposal for an individual investor: return of principal according to the full faith and credit of the U.S. government, 1% interest rate, sharing of the Bitcoin gains, tax exempt interest, tax exempt capital gains." Lay out the attributes of the program
Yep.
and encourage people to participate, because I think there are I, an observation that I would like to share is
Please.
that there are a lot of people that are inspired by a lot of what's come out of Doge, and they're saying the government could be doing better.
Okay.
It could be performing in a more responsible, more transparent way,
Yep.
and if there was a path available to contribute to the success and the resources of the government,
Yep.
where patriotic individuals could use their capital to help the government offset the national debt, lower its interest rate, but share in a tax efficient way on the performance of Bitcoin.
Yep.
I believe that that would be a really beneficial thing for the Treasury to introduce in terms of national pride,
Yep.
civic spirit,
Yep.
and just engagement with the government. So, anytime and any place that Secretary Besson
Yeah.
would like to meet, I would be happy to meet, and I would just be happy, honestly, to see Treasury begin to innovate and implement these kinds of programs. It doesn't have to be exactly what we proposed in terms of the 1% and the 50-50 and the 10-year. I think that there's room for multiple test initiatives. Let's get market feedback and see what sticks. But the bigger point, which is how can we follow President Trump's directive in the executive order to acquire Bitcoin at in a revenue neutral, or for that matter, a revenue positive way for the U.S. government?
Yep.
Um, and if we can also, accomplish some other strategic objectives, lowering the interest rate,
Yep.
potentially offsetting the debt, which is extremely important. I know to Senator Cynthia Lummis as well, who's a key proponent
Huge. Yep.
of the Bitcoin initiative. And now, the Bitcoin Act of 2025. I mean, I'm actually quite encouraged, because when she first introduced it in 2024 in the last Congress, there was one co-sponsor, and that's where it started, and that's where it ended. But
Yep.
then she reintroduced it. She has six co-sponsors, six original co-sponsors in the United States Senate,
Yep.
which is substantial. And Congressman Begich from Alaska, he introduced it,
Over in the
and I
house.
know
Yep.
with six co-sponsors
Yep.
as well. And I noticed, I looked at it last week, it's gone to 8. So he's gotten 2 more co-sponsors that have signed up. One from Missouri, Congressman Onder, who
Okay.
represents Jefferson City,
Okay.
where there's a bill pending for a local strategic Bitcoin reserve at the
Yep.
Missouri level. And the other one being the at-large representative from the Mariana Islands, which I thought was kind of interesting.
Okay. Interesting. Yeah.
Uh, yeah, so you know, I think Bitcoin has many allies from many different places.
Yeah, I think we're learning that too. But I also want to be mindful of your time, Andrew. I could pick your brain and listen to you talk for hours on end. Just want to say thank you so much for making some time to speak with us today. I'm sure we're going to continue this conversation in the future. But I will say, just in case my boss David Bailey is watching, you heard it here first. We need to get this man in front of Secretary Bissett. Let's get on that. Anything less? Final thoughts or anything, Andrew?
Um, no, but I do just want to give Delegate Kimberlyn King Hins,
Okay.
and I'm sorry if I don't have that name right, but Kimberlyn King Hins is the district at large representative for the Northern Mariana Islands,
Nice.
and she is that was the name of the representative who recently signed on. So I just want to
Love it.
recognize her leadership
Yeah.
here.
Shout out. Appreciate it. Well, Andrew, thank you again for your times. For your time. We sincerely appreciate you joining us. And as I
Thank
said,
you.
I'm sure we're going to continue this conversation.
Thank you. With pleasure. Thanks for
Pleasure's
all the
all
great
ours.
work.
Thank you. Take it
Thank
easy, everybody. Talk soon.